part of my thesis has been that we're in the end game of a 43-year secular bull market. At one time, I thought it was going to be a 42-year, and it stretched out. But it started in August of 1982, and the Dow at that time was, I can remember because I was running money then, and I turned bullish in August of 1982 in a new place where I basically had a great run. And they fought me. They were not equity guys. They thought we were crazy to do what we did, but I had top percentile numbers for 5 years running. The Dow back then was 780,
Wow.
780. And I'm calling 60,000 for this year. And frankly, I get beat up, as you know, all the time about moving my time targets. I don't have a time target per se.
Hmm.
I do. I'm not saying it can happen anytime, but whether it happens in October or November, December or January, I don't care. It's coming soon. And people say, "Oh, you've already pushed it out again." No, I haven't. I haven't changed anything. I still think it could happen, by October or November. But anyway, it's rates coming down and earnings going up, still holding firm. And very big part of this, and the dollar selling off, and a very big part of this is Wall Street moving from constantly looking for a top with one foot out the door to being all in. They're getting closer to capitulating here and saying, yeah, I got to get more bullish because this thing has legs. And that's going to be the fuel for what I think will be a very steep run. But in answer to your question of how you could go that far, that fast, it's a parabolic that I think comes at the end of such a long cycle.
Right. And that kind of parabolic spike at the end is also as a result of that kind of confluence of factors: earnings higher, yields lower, reduction in the value of the dollar. That's kind of, I think, a theme that underpins a lot of your calls as well, which is a reduction in the value of the dollar. So effectively, it's not necessarily just the value of stocks going up; it's actually just the value of the dollar going down. It's inflation in another
Right.
guise, effectively.
Yeah, acid inflation, because I believe
Yeah.
we were heading towards deflation. I'm not in the inflation camp, but acid inflation for sure, because the dollar's going down. And probably the easiest place to look at that is in the metals, right? If you look at
Mm.
gold, most of the
Nice
move.
segue into the metals there, Dave.
Yeah, well, yeah, I wasn't trying to jump ahead of you, but if you look at gold, for example, whether it be in dollar terms or other currencies, a lot of the move is the inverse of the currency, right? So we're
Indeed.
we're in a dollar decline period, and that's very bullish for gold
Indeed it is.
in dollar terms.
And just in dollar terms, then, what are your precious metals calls?
Yeah, so I have 4,000 on gold. I can't remember whether when we talked last time I was there, I had been at 3,400 and
Mm.
raised it sometime in last year. So I raised it to 4,000, and I think we've been consolidating since April in a sideways consolidation. We're very close to breaking out of that, and I think we're about to. I think we'll see it in September, and have another nice run, probably to 4,000 in the last 4 months of the year. Silver, I have a 75 target that I've had for a long time. We're right now, as we speak today, I think, at the highest level silver's been at since 2011.
That's right. Yeah.
So that's a big run. People have been very skeptical of silver, and it's awakening. I think next stop is mid 40s, and then from there, I think it's 75, and you could be there by the end of the year. Like I said, as I say on X all the time, markets don't care about the calendar. So whether it's December, whether it's January, it's sometime in a time frame that's not too far out.
You make a lot of our subscribers and our clients very happy. We get to 75 by the end of this year on silver for sure. And you're talking about those calls, 75 and ultimately 500 on silver, and then the 4,000 again potentially by the end of the year on gold, underpinned by the same fundamental thesis as what you're talking about for the asset inflation in equities as well.
Yeah, that was one thing that people didn't. I think I was relatively contrary on this. Was people have been conditioned to think that gold moves inverse to the equity markets. And I've been consistently saying that's not necessarily the case, that in this environment that we're going to have with lower rates and lower dollar, both equities and the metals will move up together. And surprisingly so, bonds as well. So
That was going to be my next question because I'll get hauled up in the comments if I don't ask you. I mean, that's a kind of call on itself where you're talking about seeing higher equities, higher bonds, and higher metals,
yep,
which is really probably only possible with a flight out of the dollar, flight out of fiat currency in general, and just looking for any sort of a home at that stage. Is that what you're
it's
talking about?
that, and also if you look, and I guess I cut my teeth in this. Like I said, I my favorite time to remember was 1982 because I hit it right on a dime and had really top 1 percentile pension fund manager performance for 5 years running in a shop that I had to drag along kicking and screaming. So I remember that very well. It's also reminiscent of what you get at when you have the start of a Fed easing cycle,
Hmm.
right? So when the Fed starts printing, what moves? Rates move down, so bond moves up, equities move up, and metals move up. And so that's what it's going to feel like, I think, in the next 3 or 4 months. The thing is, we're not starting from a trough.
Sure.
We didn't go through a bear market. So that's what's unusual. And I think that's where people are going to probably get it wrong, is they fought this all the way up. I keep saying that at the top, what you'll see is everybody will be all in and tell you this thing has years to run, at least a couple of years to run, and I'll be at that point contrarian saying no, this is the top. We're close to the top.
And you think we move into a deflationary cycle after that? Is that a kind of a general CPI deflation? Are you talking an asset price deflation or?
More than good question. More than asset deflation, I think we will actually see CPI negative, PPI negative, even PCE negative, and it comes. My reasoning is pretty simple. It's number one, we're highly leveraged. The reason I call for a global bust is because we're so far beyond even 2008-9 in terms of leverage on the system, both debt, as I keep quoting, 330 trillion in global
Mm,
debt. And I realize a lot of it's sovereign, but 330 trillion in global debt, and quadrillions in notional value of derivatives. Never been here before. Never. And derivatives are leverage on markets. Debt is leverage on the system. Um, Never been here before. I mean, this is so far beyond anything we've charted in our past. That'll turn a normal downturn into something far worse, I think. And so, and obviously a financial crisis if leverage starts unwinding. Um, so that's how I get to a global bust. And
and the timing of that, like, are we talking, I know you don't like to necessarily mark a day on the calendar, but the timing of that is the case of after we see the parabolic spike, that's when we move into it. And that parabolic spike in itself is a potential movable feast, depending upon what's happening on a macroeconomic perspective.
yeah, the bust, will probably be. You have to go through recession before you get to bust, right? So
Mm,
you start the downturn in a recession, and then it just accelerates
just
from there
accelerates to
into
the
something
downside.
worse. So I've been saying we could be in recession already when they go back and backdate it. That sounds crazy when you get a GDP revised to 3.3%, right? You say, no, you're wrong. But it's surprising when the NBER goes back after the fact and dates recessions, it almost always starts before we ever thought we were in recession. So,
Sure.
and certainly there's a have and have not economy. So for sure, half the economy is in recession. Even manufacturing has been struggling, and half the consumers, barely get enough to eat and get have enough money to service their needs. So we are, if we're not in recession, we're moving towards one pretty soon.
Mm.
And then I would guess we could see bust. I've been saying we could see it by the end of the year. That'd be awfully fast. And again, people, at least some of the retail people, think bust, and they think it all is something that happens in 2 days.
Mm.
It has to start somewhere, so it could start by the end of the year or in the first quarter. The to all of 2026, if I'm right, is going to be a bust. I mean, and it could carry into early 2027. It'll be fast, relatively fast, kind of like 2008-9. in terms of a downturn. It's not a depression, but it'll feel like a depression. It'll be something worse than a normal recession.